Should you buy index funds or pick individual stocks? This debate has been raging for decades. Here is what the data actually says. Over any 20-year period, index funds beat 90% of actively managed funds and individual stock pickers. Not 90% of random people. 90% of professional investors with teams of analysts. If the pros cannot beat the market, you probably cannot either. But here's what people miss. You don't have to choose one or the other. You can do both strategically. Put 90% of your portfolio in index funds. VTI, whatever tracks the total market. This is your foundation. It is boring, but it works. Then use 10% to pick individual stocks if you want. This scratches the itch to be active without risking your future. Here is the rule. Only pick stocks and companies you deeply understand. If you work in healthcare, maybe you pick healthcare stocks. If you were in tech, maybe you pick tech stocks. And never, ever, ever bet on hype. The hottest stock right now is probably overpriced. You want to find good companies trading at fair prices. Warren Buffett's wife has instructions that when he dies, 90% of her inheritance goes into an S&P 500 index fund. If the greatest investor of all time trusts index funds for his family, you should too. Picking stocks is gambling unless you have an edge. And working at a company or reading articles online is not an edge. Index funds are boring. They are also proven. Build your wealth on what works, not what is exciting.